The following program contains the opinions of the host, guests, and call-in participants. These do not necessarily represent the views of this show's distributors or sponsors. This program may contain obscene, profane, or otherwise objectionable language. Viewer discretion is advised. We're going on, and all of a sudden I realize I have to burp. What the, what the hell? You know, in 3 weeks I'm going to be 69 years old. What the hell? What's with this aging thing? I get back to what Cary Grant said yesterday. I thought they'd have solved this by now. You know. Good evening, everybody. Welcome to Cordless. It's Tuesday. It's Thursday night, September 19th, 2024. I'm Jim Peters, and welcome to another edition of Jim Peters at Night. It's episode number 158. Those of you keeping track. Our guest tonight is Murray Sabrin, economist, professor emeritus of Ramapo College in New Jersey. And now I'm going to scratch my pit. I get to do this all in front of you. Oh my God! So I invited Murray on 2 weeks ago because two Thursdays ago, 2 weeks ago tonight, the annual interest on the national debt of the United States hit $1 trillion. And so I couldn't let that go untouched because to me, this is all doom and gloom. I don't see how we can survive this. And amazingly, we pre-recorded this interview this afternoon. Basically, Murray says the same thing. Something's got to change, or else all hell's going to break loose. But anyway, so I brought him on, talking with the interest. They cut half a point off the interest rates. The Fed did yesterday. Talk about that. So we're going to talk about economic stuff, and you should listen to this because you need to be educated. Educated, you do. You need it. Also, I got good news and bad news. So Monday and Wednesday, we didn't do a show on Tuesday. Monday and Wednesday, we were off of YouTube because we couldn't connect to their API. We fixed that tonight, but of course tonight we're off Blog Talk Radio because we can't connect there. It's the intertubes, ladies and germs, and it's so damn complicated. It's amazing any of this works at all. That's what I think. So we're not on Blog Talk Radio. I was looking forward to taking calls during part 3 tonight, but most of our calls come from Blog Talk Radio. So, and also because I'm also taking Monday night off. The reason is my wife is having surgery. She's actually having surgery early tomorrow morning, but she's going to be out of it for several days. So I took Monday off. And so because I got to wake up at 4 o'clock in the morning to take her to the airport, not the airport, because I'm shipping her off. That's right. Take her to the hospital. Oh my God. It's terrible. To take her to the hospital, we're just going to cut this short tonight. Okay. I'm not going to take any calls, none of that sort of stuff. And so we're going to put Murray on in just a second here. And that's all I got for a schedule. We're going to have shows Tuesday, Wednesday, Thursday next week. Also, I should tell you here, the way this is going to work, and I talked about this previously, I'm going to be announcing this for the next couple of weeks. On Tuesday night, October 8th, this show is going to go through some fairly major changes. First of all, the time's going to change. We're going to go on at 8 p.m. Eastern, 5 p.m. Pacific, 3 hours earlier than we go on now. That's the first change. Second change is, oh God, I wrote them down. Hold on a second. Second change is, and I mentioned this last night and a couple nights too, the show's going to be a little shorter. And the reason we're making these changes, I can't tell you yet why, but at some point in the next few weeks, I will be able to announce it to you. We have some good news here, but we have to jigger our format a little bit to fit somebody else's parameters. So that's the reason. And also, finally, this green screen set we have, we're gonna end up dropping it. And I will tell you, and this is very subtle, and you probably have to belong in the broadcast industry to understand this, we are basically transitioning from a video show to a radio show with a video feed. That's basically what's happening here. So that's going to happen. We're taking after October 1st, we're taking a week off. That Tuesday, October 1st, that's the vice presidential debate, and we're going to have our usual month in review panel here. We'll be here, Conaway, Zorro, and Newman. They're going to be joining us on Tuesday, October 1st, and after that, we're taking a week off to make these changes. Some of them are physical, a lot of them are physical. We're going to have a bunch of new equipment here. Got to figure out how to use it, all sorts of stuff. So, and also, I just want to point out this out too. We've shared the studio with another company, and on my way in today, they said, "Well, you better be prepared. It's hot as hell in there," and it is. They're right. It's hot as hell in here because, believe it or not, we're going through some goofy Indian summer here in Minneapolis, and it's very, very warm outside. And we haven't really even had a hot summer generally. But all the heat decided to show up at the end of September. It's kind of nuts. Everything's nuts, except for me, of course. Yeah, right. Anyway, we're going to put up Murray on in just a second. We pre-recorded this afternoon. What I'm going to show you now is this is our sponsor, Kong News. This is the Kong News front page in real time. And the way this works, Kong is a news aggregator. You've probably heard me talking about this before, but still, I'm going to talk to you. If you haven't checked this out, you got to check this out. It's completely, utterly free. Okay. I mean, they run some advertising on this page, but still, it's like you don't have to. That's one of the beauties of it. You don't have to register. You don't have to log in. You don't have to sign up. You don't have to do anything. You just go there. It's at conk.com or conk.news, either one. So the way this works, Conk is a news aggregator, but it's different than any other news aggregator online because most news aggregators they will take stories from all sorts of different news sources and they'll lump them together. Usually the top 5 stories from like Breitbart or from 100% Fred Up or the Gateway Pundit, and they'll put them all together, right? Okay. Even the Drudge Report does that. You know, they're probably the most famous news aggregator of all. I don't know how many people look at that anymore, but still they are. Conk doesn't work that way. The Conk system is automated, but in this case, usually automation is bad. In this case, it's a good thing. Every 3 hours, the servers at Conk News go out to 75 or so news sources and grab all the latest stories. And latest stories means the stories since the last 3 hours that they went out and grabbed it. They bring those new stories back, and then they lay them out and put them on the front page. But here's the beauty of this whole thing. They're in strict chronological order, regardless of where they came from, regardless of the source. They're not grouped. The sources aren't grouped together. So in this long, I mean, I can't show it to you here because it's very, very long. This is a very long front page. You have stories from all over the place. Like, for example, I can tell here, the story on the left-hand side, I'm using my cursor and you can't see it. What am I doing? The story on the left-hand side of the page with the picture of Trump, that's from hotair.com. And the story in the middle gutter is from the New York Post. And that's my picture over on the right. And they put my picture there because they sponsor the show. It's very nice. I used to work for this organization and I'm very proud former employee. It's a great product. So all these stories are lumped together, if you want to call it that, on the front page and in chronological order, regardless of where they're from. And in that sense, Conk News is more like a traditional newspaper than any other news aggregator on the web. And like I said, it's free to check out. It's free to use. You never have to pay for this. You don't have to register. You don't have to sign up, nothing. You just go there at conk.com or conk.news, if that's easier for you to remember. So yeah, check that out because seriously, I use this daily to lay the show out, plan our shows. It's fantastic. If you're a news junkie, you can't do any better. So that's Conk News. And now, here's Murray Sabrin. I'm going to play 12 seconds of bumper music, and we'll put Murray on. Joining us from his home in Naples, Florida, it's Murray Sabrin, economist extraordinaire. How you doing?
I'm doing great, Jim. Great to be with you again.
and it's always great to have you. Okay, so let me just start off right here. So yesterday, the Fed dropped the interest rate by 0.5%, or what they call 50 basis points. Is that important?
Well, it's important because people have to understand the Fed doesn't wave a magic wand to lower interest rates. It has to do something. And what it does is it injects money into the banking system by buying government debt that the banks own.
Yeah.
What that does is it makes reserves more plentiful to the banks so they can go out and lend money, and that money goes through the economy and it tends to raise prices. So what the Fed effectively did yesterday was to start another round of monetary inflation, which will end up giving us more inflation down the road. There's always a lag effect between the Fed's policies and its impact on money and prices and the real economy. So what the Fed does is what it's been doing for the 110 years it's been in existence, is to try to manage the economy, and in more recent times by manipulating interest rates. And as I've written over the past several decades, what the Fed does is create the business cycle. In the 19th century, we had the business cycle because banks were inflating, and that was causing booms in different parts of the country. And when people got nervous that the banks didn't have all the money that they said they did, they ran on the banks. And that's how you got banking panics throughout the 19th century. And the last banking panic we had, of course, was 1929 to 1933, which then gave us the FDIC to protect the banks. But going back to the Fed, what it's doing right now, Jim, it's basically the same old song: inflate, stimulate the economy, prices go up, then raise interest rates by withdrawing reserves from the banking system in order to drain money to keep inflation from not getting out of control. And in the meantime, it causes massive speculation in real estate and other sectors of the economy. And that's why you have a boom bust cycle. If the Fed didn't do what it was doing, Jim, you wouldn't have a boom bust cycle. You'd have a nice sort of gradual increase in the supply of goods and services that would cause prices to slightly decline. So we would have real honest deflation and not the type of deflation we had from 1929 to 1933. But having said that, the Fed is the great manipulator. And I wish people on TV would say that. Instead, they talk about, well, how much should the Fed lower interest rates? A quarter point, a half a point, or not at all? And the point that I want to make is when the Fed kept interest rates at 0% for many, many years, Jim, we had the most massive transfer of wealth from savers to Wall Street because we were getting 0% on our savings accounts, 0% on our money market funds, while Wall Street was borrowing money at close to 0%. And that was giving us a stock market and bond market boom, as well as real estate was booming. So
So
again, the Fed, what it does, it tries to, quote, stimulate the economy in order to keep unemployment down and try to keep prices at bay. But all they end up doing is causing a lot of pain for a lot of people who have to deal with the higher prices. Remember, wages don't go up as fast as prices do. And so the average worker sees their real standard of living going down during an upcycle of inflation. And right now, inflation has gone from 9% in 2022 to roughly 3% now. But if even if you're getting a 3% raise, Jim, you're paying taxes on that extra income, and therefore you're getting a lower real income than you otherwise would. So the Fed is the engine of inflation. It's the manipulator of the economy. It causes all sorts of pain because of the boom bust cycle that it creates. And I
oh,
wish the
sorry.
policymaker, let me just finish, Jim. I
Sure.
wish the policymakers would read the little booklet that you just got, Rothbard's What Has the Government Done to Our Money,
Yes.
available for free at the Mises Institute.
Yes, I got it. I got my free book from the Mises Institute. I just got it a couple days ago. Have you noticed, Murray? I've been seeing in the business press more and more people saying what you were saying about the fact that they just cover about how much, whether they're going to raise the rate and how much. I'm starting to see more and more people bitch about the exact same thing you're talking about, that this is all BS. And these are like relatively legitimate business journalists. Have you noticed this?
I think people who have insight, who have been reading the good material of the Austrian school economists that you can find at the Mises Institute, they've been talking about this for decades and decades and decades. In fact, Mises' first book on this was in 1912, The Theory of Money and Credit, where he outlines this. And then again in his 1949 book, Human Action. But I think people who are curious about why we have this up and down economy have to reach the conclusion that it's the Fed that's causing it by lowering interest rates, by pumping money into the banking system, and then withdrawing it in order to raise interest rates to dampen inflation. And there's no need for the Fed to do that. All we need is to have low taxes, less regulation, and less government spending, so the free market can do what it does best. The men and women entrepreneurs around the country can produce goods and services at continually lower prices. In fact, I just saw Costco, we're Costco members, and I just saw their email today, and the prices of HD TVs have plummeted since I first bought mine in 2007. I mean, for
Oh
what I
yeah,
paid
it's nuts.
for what I paid for a 32-inch HD TV in 2007, you could buy probably, I think, a 65 or a 75
Yeah.
inch TV today.
Yes, it's crazy. I mean, the last time I saw it, my neighbor got a 55-inch television for $260.
Yeah,
That's like
yeah,
nuts.
yeah,
That's nothing. All right, I
yeah.
have another question because I have questions. That's what we do. How many
Right.
how many people are on the Fed Monetary Committee? About what, 55 or something like that? How many?
No, it's the Federal Open Market Committee. They're the ones that vote on whether to raise or lower interest rates. I think the number is 12 or 13, if I'm not
Okay.
mistaken.
All right.
Because
So
yesterday's the announcement by Chairman Powell said, I think there were 13 because 12 Fed governors agreed with the decision to lower interest rates by 0.5%, and there was only one dissent, and that the Fed governor wanted to lower it by only 0.25%.
right.
Nobody was in favor of keeping interest rates flat. So it just tells you that the mindset at the Federal Reserve is let's lower interest rates, even though the economy is doing relatively well. Unemployment is still at historically low rates, and the Fed typically lowers interest rates to stimulate the economy when there's a recession clearly underway. So what the Fed is doing is basically setting us up for another round of inflation down the road.
Okay, my follow-up question to how many people there were is, do these people, you're talking about this boom bust cycle,
Yeah.
do these people know that what they're doing makes this happen?
No, no. They if they knew what was causing this, they would say, "We're not going to manage interest rates. We're going to leave interest rates alone and let the market decide what interest rates are." At the long end of the yield curve, in other words, from short-term maturities to long-term maturities, interest rates are set by supply and demand. So why can't we have that at the Fed funds rate, which is the rate that banks borrow from each other for overnight money? So if the free market can set interest rates at the long end, why can't it do it at the short end as well? And this is the conundrum that we face: is that the Fed thinks it has to manage short-term interest rates in order to give us low inflation and low unemployment, and it hasn't worked out at all since the Fed has been created.
So as a libertarian, I have to ask, is this a matter of people just wanting to control stuff? Because I'm starting to look at the entirety of government worldwide as basically you have people who want to meddle. That's basically what it is. And they
Yeah.
get into positions of power and they meddle. That's what's going on here. If you know,
Yeah, absolutely. In fact, I would make the case that the Federal Reserve, remember, the Federal Reserve was created with the input of the Wall Street bankers back at the secret meeting in Jekyll Island off of the coast of Georgia in 1910. And what they came up with at that meeting became the blueprint for the Federal Reserve Act that President Wilson signed in December 1913. And the whole point of the Federal Reserve was to protect the bankers from their own folly, which is borrowing short and lending long. Like we saw in the
uh-huh,
movie It's a Wonderful Life at the end, where there's a run on the Bailey savings and loan. People are
right.
trying to get their money out, and George Bailey says, "Your money's not here; it's in Joe's house because we lent the money to buy his house." So the banks operate on a flawed business model, which is borrowing short and lending long. Banks are the only economic institution that can go belly up overnight if people lined up at every bank in the country to get their money out because the banks don't have the money. It's tied up in loans. And that's the real flaw in our banking system.
Yeah, well, forgive me, but the very reason that banks have to be licensed and chartered is so that they can lend out more money than they have, right?
Yeah. Well, it's
Yeah,
not the more money that they have. It's just that they do something very interesting. Is they put 10% of the deposits in reserve and they lend out the rest. But the people who deposit money in the bank can get all their money out at any time, and so that would cause an imbalance. In other words, a liquidity
yeah,
problem at the banks because the banks don't have all the money to meet the needs of the depositors. But because of FDIC, the government insurance program that FDR put in during the Great Depression, depositors are now insulated to the tune of $250,000 in insurance when bank deposits are not insurable events, but the federal government has nationalized that. The banks do not operate in a free market. That's the bottom line, Jim. They don't operate in a free market. If they did, if they wanted to make a 5-year loan, they would have a 5-year CD to match the maturity of the liability and the deposit. And so if
uh-huh,
banks did that, they would be much sounder institutions. You wouldn't have government insurance. And then the question is, who takes the hit if the loan goes bad? Is it the shareholders of the bank? Is it the depositor? Or is it the combination of the two? And that's what a free market is all about. You assume risk when you engage in economic activity, whether it's buying a car and it's a clunker, and therefore it's not up to your expectation. But if there's a warranty issue, of course, the manufacturer makes good on it. But risk is inherent in buying stock and buying bonds. And there are no guarantees, as they say, when you buy these assets, or even if you buy any other asset, real estate. I mean, you could buy real estate in what you think is a good area, and then something happens down the road, and the value of that real estate plummets. So there's no insurance for that if the value of the real estate plummets. So
right.
you take your risk, you make your choices, and you have to live with them.
All right, I'm gonna reiterate this because I find this really fascinating. I'm seeing all over the internet, I see memes, I see, like I was telling you, more and more people are starting to talk about what you're talking about. The thing about abolish the Fed has almost become a meme on the internet,
Yeah,
it really
yeah,
has. Well, okay, so here's my question, based on what I read yesterday, and because I'm an ignoramus when it comes to economics, a lot of okay, just assuming that everything you just said is right, and I assume it is, um nonetheless, people say that even within their own little feisty domain, that the Fed has a tendency to cut interest rates too much too fast. Is that true, even for what they're trying to accomplish? Is that correct?
well, what the Fed tries to do, Jim, is when we had the financial crisis of 2007, 2008, and COVID, the Fed really poured so much money into the banking system to, quote, stimulate the economy. They poured trillions of dollars in, especially during COVID. I mean, the Fed created $4 trillion literally overnight in order
Yeah,
to stimulate the economy because of the lockdowns. That was just an unconscionable phenomenon
yeah,
because if we didn't have the lockdowns, you wouldn't have had the spike in unemployment, the drop in production and
right,
consumption. And so the Fed, quote, came to the rescue because the federal government borrowed trillions of dollars in order to make people whole during COVID. And so when the Fed starts engaging in this round of lowering interest rates, this doesn't it doesn't affect the economy immediately because the economy is in the cycle. Uh, and then if the economy is in a down cycle, the economy is not going to respond immediately to the drop in interest rates. As we saw in 2007, 2008, the Fed was lowering interest rates in 2007, 2008. The economy didn't pick up till 2009.
hmm,
And so the same thing happened with COVID. The COVID was a unique phenomenon because of the lockdowns. We never had this before in American history, and I think we're still feeling the fallout to some degree from the lockdowns because so much money was created, and that's been dispersed to people, businesses, and individuals. Now, how much of that money is still around remains to be seen because uh, it's been a while since massive influx of money came from the federal government, like in 2020, 2021, and in 2022. But the point is, Jim, you a sound economy is based upon production, investment, savings, innovation. No, the government doesn't have anything to do with it. That's part of the free market dynamics that's been around for a couple centuries now. And if the policymakers at the Fed and in Washington really don't understand that.
Why? Why don't they understand it? I mean, I
The
understand it. I mean, look, I'm an economic ignoramus, and even I could have told them that putting all this money into the system in 2021 is going to cause inflation. Every
Yeah.
every freshman economics student in America knew that, and yet they still did it. I don't understand.
Well, Mises has this great quote that the reason that the Fed or central banks do what they do, it's an ideological view of the world, namely that they have to be ready and able to stimulate the economy. And you know where this really comes from? The Great Depression, because you had a really collapse in the economy. The stock market was down nearly 90%, unemployment spiked to 25%, production, consumption imploded. And so and Herbert Hoover, by the way, started to try to stimulate the economy with all sorts of spending programs, and the Fed tried to inflate us out of the Great Depression or the downturn, which turned into a nightmare. And then FDR just continued it. So the Depression lasted until we entered World War II. Not that the World War II was a cure for the Depression, but when you take 12 million men who were in America and put them into uniform, you cure the inflation, the unemployment problem, but you don't cure the problem that we had with all the cheap money during the 1920s, which gave us a stock market boom and real estate boom. So they don't get it. And they don't get it because the Federal Reserve is really beholden to Wall Street. People don't realize that. Wall Street helped create the Fed, and Wall Street depends on low interest rates. Uh, Real estate developers want low interest rates so they can build more and more and more. And Trump, even he said he's a low interest guy because he loves debt. As a real estate developer, you take on a lot of debt. So if you take on a lot of debt, do you want high interest rates or you want low interest rates? No, you want low interest rates. How do you get artificially low interest rates? The Fed floods the economy with money and credit. And so that's why this problem is not going to go away, namely the boom bust cycle, until we either reform the Fed or the Fed is abolished.
Yeah. All right. So, and you just brought up debt, and that's the actual reason I asked you on here last week is because 2 weeks ago today, supposedly, the national debt of the United States, the interest rate on it, the interest payments on it, hit $1 trillion annually. Now,
Yep.
I'm looking at this and I'm saying this is the most absurd goddamn thing ever. It's like, I can't. I do not understand. And I've said this amazing. Every time we've gotten together, I don't understand how doing this at some point can't lead to any catastrophic outcome. Am I wrong? Or it's like you.
No, history is littered with countries that took on so much debt because they didn't balance their budgets and they printed money in order to cover the deficits. That's what happened in Argentina for decades. That's what happened in Germany in the early 20s. That's what happened in East European countries after World War II. It's happened in so many countries around the world, and it's led to triple digit inflation, skyrocketing interest rates, high unemployment, and a financial catastrophe. So this is the road that we're headed. We've been heading on. We've been traveling on for decades, and now I think the chickens are coming home to roost because interest on the national debt will soon be, if it's already not there, the greatest expense of the federal government. And
Yes.
when that happens, that means we have such an out of whack situation. I mean, no individual, no corporation can do this, can
Right.
run these huge deficits. The government can do it to a large degree because they can borrow money because the dollar is now still the world's reserve currency. And a lot of countries, a lot of individuals around the world buy US government debt. But if they start cutting back on their purchase of government debt, then the Federal Reserve will step in. And where do they get the money to buy the debt? They print it. That's called monetizing the debt, and that will lead to a catastrophic inflation.
Yeah. All right. So my last question here, because I know this is fairly complex, and you can elaborate on this. Um, Hold on, I gotta gather what was my last question?
The
Okay.
debt, the interest on the
Uh,
debt.
alright. So yeah, okay, you and a lot of other people have been advocating for the abolishment of the Federal Reserve. But if you abolished it, there's certain things they have to do, like you said, control the money supply. Who would do it? I mean, okay, Mike, you mentioned just offhand, just for a few minutes ago, about the fact that you either had to revamp the Fed or abolish it. Somebody has to do some of that stuff. So I don't know. You couldn't just abolish it altogether, could you?
Well, you could phase it out. In other words, what the Fed should immediately do is stop buying government debt or mortgage-backed securities and just freeze their balance sheet. If you go to the Federal Reserve website, FRED, the Federal Reserve Economic Database of the St. Louis Fed, the balance sheet reached nearly $9 trillion. It's now down to, I think, 8 trillion or maybe even $7 trillion. It should freeze it there. It should banks should increase their reserves to make them sounder. That would reduce the money supply, and that would break the back of inflation and begin the process of deflation, natural deflation in the economy. Now, the Federal Reserve can still be in existence in order to clear checks. Everything is done electronically today, so I don't know why you would need the Fed. The banks are interconnected electronically. So if I write a check to you, Jim, my bank sends a check to you, you deposit it, and then it clears my bank, and my checking account is debited, your checking account is credited. There's no problem. The problem is of this continuous increase in the supply of money and credit from the Federal Reserve and the banks. And if the banks want to be good fiduciaries and good stewards of financial assets, they should match up the loans that they make, a 1-year loan with a 1-year CD, a 5-year loan with a 5-year CD, a 10-year loan with a 10-year CD, and you get rid of the inflationary tendency of banks to just collectively create more money than otherwise there would be in the economy. So again, the solutions are pretty simple. Rothbard outlines it in the Case for 100% Gold Dollar, which is sort of a companion booklet to What Has Government Done to Our Money? And if you understand money and banking, this becomes fairly easy to do. The question is, what do you do with all the assets of the Federal Reserve, which is now pretty substantial? I mean, they have 250 million ounces of gold on their balance sheet. We can go back to a gold standard by setting the ratio between dollar and gold at a level much higher than the official level of $42.22 and the market price of $2,600 an ounce. So we could do all these things. This is something that the technical people in the monetary arena can handle. But in the meantime, we've got to get away from the notion that the Fed is necessary to give us a sound economy. The sound economy is based upon savings and investment and entrepreneurship and labor, working with business people to give us the best possible outcomes in the economy.
It's all people who want to control other people, Murray.
Yeah,
That's what it is.
absolutely.
I mean, it's just. I mean, and this is what fascinates me about economics, because at the bottom end of it, you're talking about psychology. You know, it's like, I mean, I understand there's all the stuff you're talking about. I understand it makes very good sense. I understand the principles and the mathematics behind it, or I kind of sort of do. But at the end, it's really literally people who want to control other people. You have a organization here that doesn't really need to exist.
Absolutely. That's why it's important that people read Rothbard's What Has the Government Done to Our Money? It is the best introduction to money and banking. You could read it in one afternoon. And then he does at the end, which is really terrific. He gives you a history of the international monetary system for the past 200 years. And he shows how that has evolved from a hard money gold standard situation to what we have today, which is fiat money. You have the book right there, don't you?
Yes, I got it, but I can't. On my screen, it's not coming into focus. But
Okay.
yeah, there it is. Yeah, I got it.
There you go. What has government done to our? I
Yeah.
read it 50 years ago. It really gave me some great insight into the world of money and banking, and everyone should read it to understand better than the Federal Reserve officials do.
Speaking of great insight, that's what you do too, and I appreciate it, and the public appreciates it, and God knows you are doing the service for humanity, because most people find this too complicated, and I find it depressing. Although I totally believe you that the people on the Fed committee don't understand this. So it's like, whatever. Okay. Hey, let me ask you one quick question before we leave. Has we ever paid down any of the national debt?
Yes, the last time, this is a great question. Last time the federal government had no national debt was under President Andrew Jackson nearly 200 years ago. He paid down the federal debt and it was at zero.
Oh, that's great. 200 years ago, that's fantastic. I know that Clinton balanced the budget, but people
Yeah,
confuse the debt and the deficit. The
yeah,
deficit is the annual amount that the government is in arrears. The debt is the accumulated amount. So,
right, right.
well, Murray, I can't thank you enough. Thank you. I
I
mean,
appreciate it, Jim. Great to be with you again.
you explain in 30 minutes, and it's we need more people like you. Thank you. Thank you very much.
Great to
Take
be
care.
with you.
Click the button. Yeah, I did. It's all buttons. So I don't know what happened there. My video was jittery, as you see. That's the very first time ever. We have very fast internet connection here, and very fast computers. And usually, almost, as a matter of fact, I think this is the first time it's ever happened. We oftentimes have trouble with our guests and their internet connections to us. But that's a local thing regarding my picture, getting into the recording, and for some reason, it was jittery, and I don't know why. And, it's basically been a comedy of errors over here the last, 48 hours. So, who knows? Like I said, it's amazing all this works at all. It is completely amazing. So, anyway, our thanks to Murray Sabrin. He was very pithy there, he goes on, he expounds, but still, it's pretty much, pretty impressive how he can explain stuff in relatively simple terms. So, like I said, we take Fridays off here. Uh, Monday, I'm taking off because my wife's having surgery. And on Tuesday, October 8th, we're making some changes to the show. You'll see it then. So we're done for tonight because I wanted to take some calls for the second half, and that's going to be our general modus operandi here. We're going to do interviews in the first half of the show and take calls in the second half, but Blog Talk Radio's down, so screw those people. So at any rate, we're done for the weekend, and I want to thank you for watching. Very much want to thank you enormously for watching. I'm Jim Peters. We'll be back next Tuesday. We'll be back on Tuesday. Good night, Esperanza. Good night, Uncle Donnie, and good night to you, wherever you are. We'll see you on Tuesday. Have a nice weekend.